Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seymour.
Well, welcome everybody back to another episode of the Apartment Guys podcast. We are coming to you live from the Groundbreaker podcasting stage at the best ever conference in Denver, Colorado, where we've been for the last 3 days, jamming with about 1,000 multifamily investors, entrepreneurs, and it's been amazing. We've made some great connections here. The whole Greenlight team was here this week. My partner Carl York and Chelsea Garber and myself, we all made it here. We got to network with some amazing folks and really brought some powerful people into our circle. And one of those people is joining me right now. I'm really stoked to bring my buddy Jack Krupey onto the stage with me. And onto the podcast with me. We're going to talk about his story and his journey into the multifamily space and kind of what he's up to now. So, Jack, welcome, man.
Hey, thanks for having me.
Yeah, you bet. It's awesome to have you. So, Jack, you and I have had some time this weekend or weekend to get to know each other a little bit, and our teams have gotten to mingle and kind of share some trade secrets and our stories. But if you would, for our listeners, I think your story is awesome, and I think you have a lot of value to bring the listeners. So if you could kind of just share with the listeners who you are, kind of where, obviously where you're from especially on a business real estate level, and what you're up to now. We'd love to know all that about you.
Sure. So I've been in real estate since 2001. I thought I was going to be more in the IT, information technology, computer industry, but I graduated during the dot-com crisis. So actually got into real estate because I went to Vegas for my 21st birthday, and I saw the glitz and the glamour, and I bought one of those paperback books at Hudson News called How to Make $1 Million in Real Estate, and read it cover to cover on my flight home, and called my landlord from college. I was going to college in Rochester, New York, and in 2001, 2002, you could buy a house pretty easily. That was before the first financial crisis. Right. So within a month, I bought a 2-family house, almost no money down, and within a year, I owned 5 of them and quit my job and was pretty active in real estate until the 2008 crisis when things froze.
You were how old at this point?
I was 22 when I bought my first property.
Oh man, that's amazing. Good for you.
Yeah, and I thought I was going to be retired by 30, but then the financial crisis hit and things froze up. And I took a few lumps like a lot of people did in 2007, 2008, but certainly learned a lot. And probably the biggest blessing was after that, I ended up at a hedge fund in New York that was actually buying non-performing mortgages. And they needed real estate people who understood how to do short sales, how to buy REOs to work on the banking side to help them figure out what to do with these portfolios. Mm-hmm. So had a pretty good run doing that, and was living in New York City with very high tax rates, and found a couple syndicators that lived in the New York area but were buying properties in North Carolina, Georgia, South Carolina. So I started investing passively in multifamily syndications. Mm-hmm. I ended up getting bought out of my prior mortgage company, and really loved the syndication market, wanted to get more involved, and knew I was going to invest a lot of my own money into multifamily anyway. And I decided to build a fund around that, and a diversified fund, because one of my challenges was with a limited amount of capital, how do you choose which deal, which market, which operator? Right. And I do feel that investors need more access to these alternative investments that are not correlated to the stock market and frankly bond yields. It's very hard to get any sort of passive income in the stock market right now. Yeah. So I wanted to create a product that was catering to these types of investors. So we have a diversified fund called jcaminvestments.com, and we have one fund that has made over 30 allocations into multifamily. We're primarily in the Southeast and the Sun Belt. Mm-hmm. We have deals in Atlanta, Jacksonville, Phoenix, Dallas, Vegas, most of the major markets and some secondary markets. And it's great to be here and network with groups like yours. This is a great event, and glad to be here.
Yeah. Listeners, like if you haven't been to one of these events, you can tell just by listening to Jack's story and his trajectory in business and what he's been able to accomplish and do. You can tell that this place is jam-packed with high-level people that are doing big things, have done big things, and know how to do big things, and are up to doing bigger things in the future. And so to be surrounded by people like Jack and so many others here at this conference has been amazing. So I feel like listeners, put it at the top of your list in 2022 to get to one of these big national conferences, whether it's Dealmaker Live at Michael Blanc's event or any Jake and Gino's events are great. Off the top of my head, there's Rod Cleef has some great national level events, and you're going to have anywhere from 300 to 1,000 people at these events, at least sometimes, and it's loaded with everything that you might need for the next step in your business is going to be available at these events, right? Like, so whether that's your next partner, your next capital source, your next deal finder, your next broker relationship, et cetera, like if you come with the intention to these events to get certain things done and be very specific about it, like they're really powerful. And one of the things I came with the intention of doing is meeting really high-level guests for the podcast to bring the listeners a powerful story. And so Jack, let's kind of dig in a little bit and dive in. So first, before we do that, let's just define a diversified fund for the listeners. So my understanding of a diversified fund is it's a fund in which the passive investors have the ability to essentially choose the asset that their funds are being allocated into. Is that the case?
Actually, ours is a little different. At least
Okay.
Our fund one is, you're investing in the fund and you own a piece of every single deal. It's one LLC, and there's over 30 individual property syndications that we've made allocations to. We have a separate vehicle which we're launching this year, which does allow for picking and choosing of assets. And that's actually launching next month.
And what's a fund like that called for the listeners? That's
we're calling it a flexible allocation fund.
There you go.
There's a new technology portal we're launching that we're partnering with that's launching that. It's actually pretty cool technology because prior to that, you'd really have to do a separate private placement for every single deal. Mm-hmm. So the ability to use a platform which looks more like a brokerage account where you can pick and choose which deal to invest in is pretty exciting way. And this is all relatively new since 2012 when the regulations changed on crowdfunding and opening up the Reg D 506C. So there's a lot of new and creative options that really weren't available 10, 15 years ago to investors that I'm pretty excited about.
Yeah. Well, let's start right there. I mean, let's dig in right there. So most of us know there's more capital and more liquidity in the market than we've ever seen by a long shot right now. So there's a lot of capital looking for yield, and we keep hearing that this weekend. That's been a common theme this weekend. So when you say that there's exciting tools available for investors that are seeking good deals with cash flow and appreciation and the tax advantages and all the things that are available, what do those look like? Like what are those tools that you're seeing, and what's exciting about them?
Sure. Well, obviously, there's a number of very public crowdfunding platforms like CrowdStreet, and then there's a lot of smaller platforms that really took a lot of the friction out of raising money. Mm-hmm. So for us, as and we run a relatively lean fund. There's 5 people, but platforms like Syndication Pro, like InvestNext, like Cashflow Portal, it makes the process of running a fund and doing the compliance and onboarding investors a lot easier than it used to be. Yeah. And the Reg D 506C, which just allows us to advertise. Before that, we call them country club deals. You really had to have such a prior relationship that it was really tough to start something new unless you were already super experienced and have just a network of rich friends. So it's really just made it available to the general public of anyone who's accredited that they can go to these opportunities which are not correlated to Wall Street, have significant tax advantages, and Yeah, it's great for the industry. I think it's great for the investor too, because these private type of private funds and individual syndications are, largely outperforming the stock market. Majority of the deals I've seen, and granted, we've had a good couple years of market appreciation, but I've seen a lot of deals where people are doing 20-30% IRRs, annual returns on deals where the market is averaging, maybe it did 20% last year, but it historically averages 8 to 10%.
Right. Yeah, and that is super exciting. And us as syndicators, and a lot of our listeners are syndicating and putting deals together. These things like CrowdStreet are tools that are available to us as well on the other side of the equation. And it's something that as my team is growing and we're increasing our portfolio and our balance sheet and looking for more and more capital as we grow. It's we're looking at those crowdfunding platforms as well, and starting to take them more and more seriously as part of our business model.
Yeah, and it's good for the industry. I mean, just the more people are educated about these options, the better. I have a lot of conversations with people who just don't even understand the cash flow of a syndication, how you're getting paid a preferred return on your unreturned capital, how there's not liquidity per se, but you actually have a situation most of the times where you eventually have all your money returned and you still are getting cash flow for a number of years afterwards when you already have all your money back.
Yeah, that's like generational wealth building right there. That's and also financial independence building. Like those of my listeners, a lot of my listeners are into the FIRE movement, the financial independence retire early movement, and building that passive cash flow is where it's at, right? Like that's how you become FI and the FIRE. So
exactly, and the tax advantages which you alluded to are incredible, especially for those that live in high tax states. Many people are losing 50% of their income to taxes, and the way many of these deals are structured, they're completely tax deferred. You're getting your payments every quarter or every month, but you're showing a loss on paper that isn't recaptured generally until the building sells. And in many cases, if the building's refinanced, you're getting a tax-free return of capital without paying any tax. So, if you compound that over 5, 10, 20 years, saving 37 to 50% or deferring 37 to 50% a year, that compounds into, could be multi-million dollars for many investors that they're able to save by structuring these deals more efficiently.
Yeah, and that's game changing. We'll have to do a deep dive into deal structure on a future episode. We're a little limited on time here at the conference and our stage time. So I want to ask you, Jack, and just like kind of really get into some wisdom from you about what have some of the big lessons for you been as you've grown from, literally a college freshman reading a paperback book on an airplane to being a maven and a force in the multifamily world and putting together multi-million-dollar deals and funds and all that. What can you attribute your success and your rapid trajectory and your velocity and everything else? Do you have anything that you can attribute that to?
Sure. I mean, I've always been sort of a deal junkie and a deal nerd, so I'm just intensely curious about opportunities. Largely real estate, but I'm the kind of guy, if you have a random niche business in anything, I want to understand how it works. So, I've always been curious about different opportunities, and I'll dive in, and I love to learn. You have to be adaptable as well. Graduating during the dot-com crash, realizing I had to make a bit of a pivot, and there's better opportunities out there in real estate. And then, living through 2008, that again was a pivot. Went from the traditional fix and flip wholesale of smaller deals, which has its own challenges to scalability, to moving into the non-performing loan space, which was an amazing ride, but at the same time, there's not as many non-performing loans right now. A lot of people have equity, and then that business, like many other real estate businesses, has been invaded by Wall Street. 20 years ago, there's a lot of hard money lenders just raising private money, lending money themselves. Now, the majority of the hard money lenders are essentially correspondents to Wall Street. They originate and they sell the loans to one of the larger Wall Street firms, and the rates have dropped dramatically. It's good for the house flipper, but it's actually not good for the private lenders.
Private investor,
So you have to be adaptable. And I'm moving into multifamily heavily in the last couple of years because I believe that inflation is going to continue. It's higher than they're reporting, and I'd rather lock in long-term, low fixed rate debt than be owning the debt, which is going to be to some extent be worth less when it's paid back.
Yeah. That's awesome. Well, that's good perspective. What I hear is, as far as like your secret sauce, is curiosity and adaptability. And I think I'd add a third thing that you didn't really speak to, but I can just tell about you that you really love the business and you love what you do. You're in your wheelhouse, doing what you're good at. I'm constantly encouraging listeners to know their superpower, to understand themselves, and to capitalize as much as they can on that. And being in a lane that makes your heart sing, so to speak. One of my coaches used that phrase a lot. Is a recipe for success, because it's not going to feel like work. Does this feel like work to you?
Oh, not at all, not at all. And I was very conscious of that when I was setting this business up. What things do I like to do? And I spend about half my time working with investors, half my time working with great sponsors and operators like you. And it doesn't feel like work at all.
Yeah,
so cool. I am a little tired, and my feet hurt from 2 days of walking around and standing, but certainly does not feel like work, and it never does in this business.
Yeah, that's awesome. One last question for you, Jack. So talk to us a little bit about your future, the next maybe 3-5 years, what you're trying to get done with your company, and maybe on a personal level as well.
Sure. So, I love this. I love this part of the business. I'd never really raised accredited investor money before 2 years ago. I was always in New York with larger institutional money, and for years I had friends and colleagues asking if they could invest with us, but it just wasn't open to the investor base. So I'm really excited to just continue to educate, my friends, family, associates, and build my own tribe of passive investors. And it's very rewarding for me. And then on a business level, we just want to grow our assets under management, continue to grow our partnerships, diversify a little bit more. We love multifamily, but we also love the mobile home, the storage, the other asset classes. There's still a shortage of housing supply, so we're likely to do participate in some ground up deals as well. So we'd like to expand our asset base. Still in the real estate alternatives, but be truly diversified. Personally, I love to travel. Just exiting my more New York private equity job a few years ago, where I didn't get to travel as much as I'd like. And then COVID, the last 2 years, it was harder to travel. So, this business is great because it can be done from almost anywhere. I'll fly around and tour properties, but it's easy to go to Europe for a week or two and see the world. So over the next couple of years, there's a lot of places I still want to see.
Yeah, I love it. I'm headed to Europe in 3 weeks for the first time ever in my life. So. Oh,
that's awesome.
Yeah, I'm really excited. So, well, Jack, this has been amazing. I feel like we could talk for an hour on 3 different subjects that came up, and I'm sure we'll get a chance to do a little deeper dive next time we have you on the show. How can listeners reach you and find out more about you, your investments, your fund, and that sort of thing?
Great. So our website is JKAM Investments. We call it jkaminvestments.com. And we're also on all major social media platforms, except TikTok. I haven't been able to do a dance move yet to do a viral TikTok video, but we're on Facebook, LinkedIn, Instagram, and you could follow me, Jack Krupey, or jkaminvestments.com on all the major platforms.
Awesome. So, Jack, there you go. This has been amazing. Hopefully this was fun for you.
Oh, absolutely. Yeah. I look forward to doing it again and doing that deeper dive.
Yeah, like kind of a fun surprise for the weekend, right? Like get to be on a podcast.
Absolutely.
Cool.
Absolutely. Appreciate you having me.
Yeah, absolutely. It's been great. And listeners, I know you got a lot out of this. And like I said, big takeaway, if nothing else, get to these conferences. Jack's just a great example of a high-level colleague that is now part of our inner circle that, I know at some point we'll be doing some sort of business together and learning together and growing together. So I'm looking forward to it.
100%. Thank you so much.
You're welcome. Thank you. Listeners, thanks for listening to another episode of The Apartment Guys, and we'll catch you on the next one.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.